Using a gold price of approximately 2,500, the NPV at 8% is 500 over just over 580 million dollars. The ungeared internal rate of return is over 32%.
All right, welcome back inside our proactive newsroom. And joining me now is Mark Learmonth. He is the CEO of Caledonia Mining. And Mark, it's good to see you. How are you today?
I'm very good. Good morning.
Good to have you along. Exciting news out from the company that you made a decision to proceed on the Bilboes Gold project. So, obviously, the results of the feasibility study had a lot to do with this. So, take us some of the key highlights that people should understand about the reasoning behind the decision.
Yeah, we published an RNS this morning, and we've also published the full feasibility study. So hopefully the RNS gives a bit of an abbreviation, but it confirms that the project is a large high grade project, or just about 2.3 million ounces at over two grams a ton, which is excellent for an open pittable operation. No change to the production. Total production is about 1.5 million ounces over 10 years. Although there is a bit of a change in the phasing of the production. We've looked closely at that, and so we've managed to pull some of the production forwards to front end it, which improves the overall cash flow. So I think first full year of production is about 200,000 ounces, which helps enormously. CapEx has gone up. So the peak CapEx is now $484 million. In addition to that, we reckon we'll need another $100 million to cover things like interest and what have you. But that increase reflects not changes in scope of work, but really inflationary increases in input prices, which have been very substantial. But that's been more than outweighed by the improvement in the gold price. So using a gold price of approximately 2,500, the NPV at 8% is 500 over just over 580 million dollars. The ungeared internal rate of return is over 32%, with a very quick payback period. Even at gold 2,500, the payback period is 1.7 years. Now, clearly, if you use a higher gold price, those numbers get better. So just using 3,600. The NPV at 8% increases to 1.2 billion. The ungeared IRR is over 50%, and the payback period is now just over a year. So it's a very, very strong, robust project.
Yeah, I want to pick up on something you talked about, the single phase development approach that you mentioned. And is it purely the economics, the decisioning behind that?
It is. We look very closely at phased approaches with a
Yeah.
view to chopping up the capex into more manageable bites. But I'm afraid even a project that's two-thirds the size, the capital intensity for a smaller project goes up. It costs you more dollars per ounce of production, and that just takes some of the juice out of the returns. So having looked at it and prodded it and poked it, we decided that really the only way to approach this really was to go the big bang route, the single phase route.
Okay. A lot of people ask about funding. Tell me a bit about the structure and how this is going to work.
Well, yeah, given the fact it's such a high margin mine with a very, very short payback,
Yeah.
we believe that senior non-recourse debt will provide the bulk of the funding. The project itself has a very high debt capacity, but we just think from a practical perspective, the most likely lenders will limit themselves to about 65% or maybe 70% of the project value, which is still very substantial.
Mhm.
Then in addition to that, we've got the existing operation at Blanket, which will make a substantial contribution. What we say in the press release is that we've entered into a 3-year hedging gold locking in a minimum price of 3,500 over 3 years, and that guarantees it underpins $200 million of cash flow up from Blanket Mine up to Caledonia. So that gives us a very substantial contribution to the capital cost. And I'll make it very clear, when you talk about hedging, some people sort of get a bit anxious about it. It's out of the money put options, so there's no risk for margin calls, and we retain full upside participation in the
Mhm.
happy event that gold continues to go higher. So senior debt, internal cash flows. We'll consider looking at hybrids, sort of streams, convertibles, and then the overall objective is to minimize our equity dilution. And one of the reasons over the past sort of 10 years why we've delivered such a handsome return to shareholders is because we've kept a real tight lid on equity dilution, and we intend to maintain that. So I'm not saying there'll be no equity dilution, but we'll keep it as tight as possible.
Okay. Timeline, what are you looking at?
Well, we're going to start the feed phase. That's front-end engineering design. That started immediately. That will take about 6 months. And then we want to start placing orders quickly. There's a big value uplift in terms of getting this project running sooner rather than later. To do that, we actually want to start placing orders for the substantial bits of long lead time equipment in the second half of 2026. Now, to allow us to do that, we're going to aim to put in place some short-term liquidity measures. The senior debt will probably only flow until late 2026, maybe early 2027, because the lenders move quite slowly. So to try and fast track that, we're going to put in place some short-term liquidity measures. And so that should allow us to get going in the second half of 2026, looking to initial production 3 years from now, sort of the back end of 2028. That's quite an aggressive timetable, and
Yeah.
obviously highly subject, highly conditional on the timing of the senior debt. But 3 years is what we hope to do.
Okay. Just a couple last questions from me. One is, I would imagine that there's a lot of talk about this particular project in Zimbabwe itself. It's a boon for the economy there. It'll provide some employment as well. There's a lot of eyes on this particular project.
You're quite right. It'll be a marquee project in Zimbabwe. Zimbabwe's gold production has actually increased quite significantly
Yeah.
due to the high gold price. So production this year will be about 40 tons. They sort of count their gold in tons. In the first year of production, Bilboes will produce about 6.5. So 6.5 tons in that first year. So it's a very significant increase in Zimbabwe's gold production. And you're quite right. It will make substantial payments of royalties, taxes, what have you. It's probably likely that we'll make a fuller presentation on that probably early next year to put it all together and put a bow on it. But I think it's more than just the money. I think a
Yeah.
project of this size will go a long way to allow Zimbabwe to reclaim its position, put itself back on the map in terms of being a meaningful, significant investment destination for gold projects. And I think that's long overdue.
Okay. Last question. You mentioned a lot of things that are going to happen over the next, 3 years, so to speak, 3 months to 3 years. So, a lot of updates coming from people. What should people be watching for?
I think the things
Yeah.
to watch out for in 2026 will be the progress that we make on, as I mentioned, these sort of short-term liquidity measures, which will hopefully give us the cash to get moving more quickly. Then I think something else to watch out for is going to be exploration updates, probably in February, I'd have thought. And look out for the exploration updates at Blanket, both the deep level exploration and the shallow exploration, and then also ongoing exploration at Motapa, where we're looking for sulfide material, which will mesh in very nicely with Bilboes projects. I'd look out for that in early 2026.
All right. We'll keep an eye on all of that. Mark, thanks so much. Good update from you. Appreciate the time, and we'll talk soon.
Good. Thank you very much. Thank you.
All right. There's Mark Learbond. He's the CEO of Caledonia Mining.